Happy weekend, everybody. Tim Knight here. It's January 7, 2012. I haven't said anything in weeks, but don't forget to click on any ads you see that you find of interest because that's how you support the site. And if you're feeling extra generous, there's always that donate button. Haven't, like I said, haven't said anything for probably like a month or so, but just thought I'd remind you. So I want to do a little market review here this weekend. Let me start off. I'll just kind of thumb through a couple of watch lists here and just talk off the top of my head about them. Interest rates have been quite interesting because bonds have been such a kind of inverse tool versus the equity market. And when we look at TLT, or more likely we'll look at ZB later, I can talk more about this. It is remarkable to me that in spite of the fact that interest rates are where they are, which let's keep in mind is lower than the greatest depths of panic during the long missed bear market of 2008. They just seem unable to flip around. I guess inflation fears are just non-existent. And I'll talk a bit about my TLT trade in a bit, but let's just walk through a few of these charts here. Crude oil is right up against the underside of this trend line, and crude slash energies have been a little bit weaker than most other items of late. And I'm actually short DBC as of Friday, based partly on that. The ES, I think, is slightly troubling for the bear case, and here's why I say that. This is a not too shabby triangle formation, which not only was so strong that we didn't even, back in December 1920, didn't even touch it again, kind of floated above it here, but we have breached it to the upside. And not only have we breached it to the upside, but any attempts to sell off back below it were swept aside. Kind of troubling, because what this could mean is if we get any sort of continued strength next week, there's really no reason that this shouldn't just continue higher. I mean, this is it's a nice breakout. Can't control that. What I wish for has nothing to do with the market. Obviously, we need to break below the lows of the fifth, to have any kind of chance of starting to break this pattern down and get really back inside this triangle where it's safe. But as it is now, definitely advantage bulls on that. As far as precious metals goes, I'm more comfortably bearish on these items. I don't have any precious metal short per se. I am short GDX right now, which is kind of a favorite of mine. Not a big position at the moment, but I'll make it much bigger if things start to weaken further. I think that would be one of the best shorts to have. But gold, as you can see here, got a line in the sand at 1632. Would really want to see it break beneath this 1562 level to get kind of excited about prospects for further weakness. NASDAQ, an even more poignant vote for the bulls on this one, up on Friday about 2/3%. Very similar pattern, but lots more strength behind it. This didn't come anywhere close to that broken trend line and was up every single day this year, which is only 4 days, but that's still saying something. But a nice steady ascent on this. So here again, really no reason for this to be anything but bullish at this point. Silver looks extra bearish here, down more than 2%. This level at 28.5, I think, is the next line to cross, and obviously the low of 26.14, crossing below that would be really bearish. I think that could set the stage for a fall into low 20s, even teens, believe it or not. Kind of a repeat of this kind of instance right here. So I've got a short in silver, about the same size as my GDX short. Now, here was a curious one. I actually entered Friday with a long TBT position, which is bearish on bonds. And let me just bring that up so I can speak to that directly. So here's TBT, and let's zoom in on just a couple of days. And so anyway, I owned it, and the jobs report came out, and I actually dumped it for, I think I got 19.07 or something like that before the opening bell. Or might have dumped it right near the opening bell. Suffice to say, I got out because what bothered me is that the moment after the employment report came out, bonds fell hard, and that's what I wanted to see, and they went swoop and started to move higher. So when bonds were about here, I went ahead and got out of my TBT. It just wasn't working out. I did place a very profitable day trade, really just kind of from here to here on TBT. In other words, from like here to here, which was kind of nice. But that was surprising because one would expect on a strong equity day for bonds to be weak, and it didn't happen. TLT closed up 0.79% on the day. A lot of strength behind that. So interesting. I, at the moment, am like 45% committed, strictly in shorts, and they're all little. The really stupid thing I did on Thursday night was that, I'll just go down here. The really dumb thing I did was I went long, forgive me, the euro. And, even last night, even a Thursday night, I was thinking, what did I do that for? What was I thinking? Because the broad trend here is definitely down. So again, I got out real quick, like at around here, after the jobs report came out. And thank goodness too, because I got a lot weaker later on. That was just stupid. If we look at the 5-year daily, you can see, just how broken this is. Yeah, maybe it'll get a mini rally back up to this line or so, about 1.29, but so what? There's lots, there's many hundreds of pips to go down. I think we could see this down at the 115 level or something like that before it's all over. Now to our friend GDX, kind of a perennial favorite. This was down more than 1% on Friday. I've got a short position on this, and I think my stop's pretty tight at 54.28, actually 54.30, just above the high on Friday. A more conservative stop would be above the like 54.54 level here. But, just to beat a very dead horse, I think we are the equivalent of roundabout here, given the analog I keep talking about. If this materializes, forgive me if I don't shut up about it for a while, because that would be a really cool call. If it doesn't work out, then I'll probably change the subject. New Zealand dollar, bit of the same boat there, bit of the same circumstance, and interestingly enough, a more substantial pattern. You can see, comparing this to this, what we're going through right now is even more dramatic than 08. And the dollar, if we look at UUP, rather interesting pattern here. Kind of a cup with a handle, a nice breakout, nice pickup in volume there. So I think things are looking pretty good for the U.S. dollar. I'm just going to, I see we're up about 10 minutes right here, just touch on a couple of items here. The Indu is got a bit of a challenge here because I think it needs to cross above. I would say if it violated like the highs of the summer, like if it got above 12,750, God help us, that would be pretty dang bullish, because that would not only take out this very long series of of lower highs, it would also clearly invalidate this channel, this descending channel. So that's sort of the, oh God, I guess I'll become a aluminum siding salesman if we get that much strength. So something to watch for there. The thing is now, looking at, say, SPX, is that we are threatening the same kind of levels that we last witnessed back on October 27. I guess that was the glorious day when Europe solved all their problems. Remember that? That was like the 20th time they solved all their problems, but that was the really big one after the mega summit. And funny enough, we saw what happened afterward. So we're still right around that 1300-ish level, which has a goodly amount of overhead supply just overhanging it here. If we get any weakness next week, great, but the real test is if we can break this trend line, which let's call it around 1240 or so. If we can do that, I think it's a bit of a game changer, just like the trend line break back on June 3rd was a game changer. As of now, the incredible optimism, which I guess you've seen the sentiment numbers, it's pretty much at a record for bullishness, is keeping things afloat. And that's kind of good for equity bears, as you know, or I hope you know. All right, anyway, just in sum, not a horrible week to start off. Kind of a cool close on Friday, considering the great jobs numbers. We actually had a down day by and large. I think next week will be a little more normal, have some of those beginning of year weirdnesses out of the way. And it's fairly quiet on the scheduled news front until Thursday. And of course, earnings are going to start kicking off this week, and we'll kind of get into the thick of it the week after that. So that is it. Hope you're having a good weekend, and I'll see you on Monday morning.